Hello everyone, I hope you're well. Look at this. Trading results for the past week. Please focus. I filmed myself taking each and every one of those trades live, and therefore what we're going to do is I'm going to show you the before videos, and then we're going to sit down, talk about every loss, talk about every win, discuss why I lost, discuss why I won, my risk management, all that shit. Just follow along and let's get right into it. So guys, all the trades that I just showed you have been sent beforehand to the group. As you can see right here, my CHF JPY execution right now. This is the before video, then this is the after results right here, as you can see. And therefore what we're going to do right now is I'm going to play you the before videos, and then we're going to analyze the after together. So I'm going to show you if a trade was a loss, if a trade was a win, and why was it a loss in my opinion, why was it a win, and proceed with that. So let's get right into it. So I'm going to go through them one by one. I'm going to start with Bitcoin, this $2,467 loss. Now, unfortunately, I couldn't find the video for the first Bitcoin trade. I only found videos for those. Reason being is just there's a lot of videos, a lot of updates, a lot of text sent to the point where the Bitcoin video is just lost between all the videos that were sent. And therefore, I'm just going to proceed and explain why I believe I lost that trade. Now, going forward towards Bitcoin right here, as you can see, there's two trades that I lost. This trade right here, and then a trade that I took right there. Okay, where I tried to buy Bitcoin through to the upside, and then the market pushed through to the downside and cost me $2,467. Now, of course, I took that trade on the 30 minutes time frame, and therefore there was no 6 hours perspective at that time. I wasn't looking at the 6 hours. However, something that I always do, and this is my mistake, something that I always do when entering any trade is I always recheck the higher time frames. Now, of course, in order to take any decision, any trade, if you've been watching my videos, you'd know that I go through a higher time frame analysis first, and then I go to the lower time frames to execute. I always do that. Now, if I had done, let's say, the higher time frame analysis 2 days ago, and today I want to execute on Bitcoin, sometimes what I do is I get too lazy to recheck the higher time frame analysis. So I just rely on what my brain last remembers, which is something is going up, and I just try to execute on the lower time frames. And I feel like I can rely on my brain's memory, which I can, but what I can't rely on is I can't anticipate updates that I didn't see, which was the case right here. So let me explain this. What I saw on Bitcoin is I saw the market was pushing through to the downside. It created bottoms right here, as you can see. 1, 2, bottoms right there, 1, 2, and then the market pushed through to the downside right there and grabbed all the stop losses through to the downside and was pushing through to the upside. This is what I saw for Bitcoin, and therefore I was eyeing, after the market grabs liquidity and pushes through to the upside, I directly eye the next level of liquidity. And therefore I was like, where's the next level of liquidity? Where can we say the next level of liquidity is? And I just assumed that it's going to be above these tops right here. And that was then confirmed again, because when I've done the analysis like in the beginning of the week, I've seen that the market created tops with that high, and I was like, okay, you know what, confirmed 100%, this is going to be the next target for Bitcoin, because we're creating a lot of liquidity and placing stop losses above here, and therefore what Bitcoin is now doing, we grabbed stop losses to the downside and we are headed towards these stop losses to the upside. And as soon as I decided that, I stopped looking at the higher time frame, let's say on Wednesday right here, and I just waited for a Bitcoin buy. Look at this, Wednesday, Thursday, Friday passed by, the weekend passed by right here. On Friday, I believe, or Monday right here is where I took the trade, and then the market simply pushed through to the downside, $2,467 lost. And therefore, what I didn't do is I didn't recheck this part of the price, which was very important for me to make my decision. Yes, I did believe that Bitcoin is going to go up from here after grabbing these stop losses all the way up to here. It went up almost 75% of that movement and then started going down. And in my opinion, I was like, okay, it's retracing. But I didn't recheck the 6 hours. I just knew because of the price, okay, Bitcoin is at $64,000 on the 30 minutes time frame. Okay, Bitcoin is retracing before it goes up to the $68,000 right here area. This is what I had in my mind, in the back of my mind all the time. If I had checked the 6 hours time frame, I would have seen that what Bitcoin has done is it has stopped right here, pushed down, and it's right now creating liquidity right here. If you know anything about my trading style, you'd know that I don't trade double bottoms or triple bottoms or usually support and resistance, okay? And therefore, the market right here was doing is it created bottoms with that area right here. And therefore, where did it create stop losses? Just below this area. Okay, bottoms right here, boom. Stop losses, I mean right below this area. Okay, let me fix that. No, actually not below this. I thought this is a candlestick. Let me delete that. Okay, bottoms right here. 1, 2, 3, right there, forming bottoms. Where are the stop losses of those bottoms? Right here. The market then recreated bottoms right there. 1, 2, stop losses below here. And therefore, we keep reinforcing that liquidity line. I just didn't look at the 6 hours. And this is my mistake. Simply put, I lost $2,467 because I was too lazy to recheck a higher time frame, and it cost me money. That's it. Again, liquidity bottoms were forming, stop losses were being created. I just didn't see that bottoms were being formed right here because I never rechecked the 6 hours. The last time I checked it, the market was right here, and I just assumed like, okay, the market is retracing right here, it's then going to push up. And I didn't just consider the possibility that we can be forming bottoms to the downside and we'd need to grab them before a push to the upside possibly. Okay, anyway, this is why I lost the first Bitcoin trade, being lazy, didn't check the higher time frames. Okay, that's number one. Number two, JPNZD. Honestly, what a fucking fuck up. It was just a misclick on my MetaTrader that entered this trade and I immediately closed it. That's why it's only $79. NZD CAD is also a fuck up, but not a click fuck up. NZD CAD is actually an analysis fuck up. Let me show you the analysis. Let's play the video. NZD CAD observation right now. Let's start with the daily. Daily, what we had is 3 drives. 1, 2, 3 drives to the downside. And therefore, on the daily, I could be expecting NZD CAD right now to push through to the upside and at least tackle the high of that 3 drives. So the next target for NZD CAD from a daily perspective is this high right here. Could be this high right here. Now going down to the 6 hours to look at the micro price action that is happening after the 3 drives. So the 3 drives is the left side. Now what's happening on the right side after the 3 drives right here? Let's focus on the recent price action right now. What the market has done right now is it formed 1 drive, 2 drives, 3 drives to the upside right here. We formed tops, look at this, 1, 2, and then the market pushed into them right there, and then the market started pushing down right here. So we could expect NZD CAD to at least, because we're creating bottoms right here, and therefore we could expect NZD CAD right now, maybe before that push through to the upside, to come down, tackle these bottoms, maybe come into this low, exactly this line right here, boom, from here into here, and then maybe from there push through to the upside. I'll reanalyze once the market reaches down into this area. So right now we could expect, for example, let's say a small retracement to the upside and then a push through to the downside into this low. And this push to the downside after the retracement happens. So here's my thing right now for NZD CAD. When the retracement happens, it's going to create a certain price action. If that price action is telling us, okay, you know what, let's sell this down, then I will go ahead and sell NZD CAD to the downside into these bottoms, or at least a part of that movement. Because here's the thing, if NZD CAD retraces, so let's copy that. You know what, it's already copied. I usually deal with multiple charts, that's why I said let's copy. Anyway, 30 minutes right here, look at that, this is the line. Okay, if the market retraces a bit, let's say all the way up into this area, creates a certain price action, then we have a huge move from here into here. So that 6 hours price action that you're not, let's say, you right now you're seeing it and you're saying, okay, you know what, it's a very small move and all that and it's nothing. But on a micro perspective where we execute, that's a huge move to the downside that we can get. For example, if I get something, let's say like this, and based on the price action like that, and then I push down into here. That alone is a 1-to-4 risk to reward ratio. I don't need a 1-to-4 risk to reward ratio. 1-to-3 is enough for me, and therefore, as you can see, back into the bottoms is enough price action. Now, of course, there's the scenario where the market just simply makes it down from here all the way down into there. Then depending on your entry strategy, if you can find an entry right here or not. For me, there is no entry right here, so I'll simply wait for NZD CAD to make it up a bit and then see what happens here to try to target these lows right there. This could be the next thing that I'm looking at for NZD CAD right now. Upon reanalyzing NZD CAD, this is why it's a save $330 profits right here. Those two trades right here, 79 and 330 are fuck ups. 79 is a misclick. NZD CAD right here, I did intentionally enter that trade, but it was just a fucked up trade that I entered. I'll show you why right now. I'll show you the reanalysis of NZD CAD that I'm going to do right now in front of you. And I realized that as I entered the trade, and I immediately closed it at $330 in profits, and then I was right, so I pulled a huge save on that trade, because that would have also cost me almost $2,500. So that would have been another $2,500 in loss. What I want you to also right here keep an eye on is that even if I didn't save that trade, okay, because a lot of you guys tend to run away from fuck ups. Like if you fuck up, you consider that you're a failure or whatever. If I fucked up for NZD CAD, so number one, I had my first fuck up on Bitcoin where there was a double bottom. I didn't recheck the higher time frames because I was lazy. So if I had done that, lost this money, and if right here I kept my analysis and I didn't recheck it again, so I didn't do the same mistake right here. On Bitcoin, I didn't recheck, cost me money. On NZD CAD, I rechecked, it saved my ass. Now, if also right here I fucked up again, so my first 3 trades for the week would have been fuck ups, I would have been down $2,500 on that trade. My account would have still been up. And therefore you can fuck up, but as long as you maintain consistency and you just continue trading as if nothing happened, as if you just didn't fuck up right now, then you still could save your account and land in profits at the end of the week. Because as I said, I fucked up for Bitcoin, I fucked up for GBP NZD, then I fucked up for NZD CAD, and even if I kept my analysis right here for NZD CAD, my fucked up analysis, I would still be in profits at the end of the week because I simply don't care. I fuck up today, I wake up tomorrow like I didn't fuck up yesterday. I just wake up and I trade as I normally would. I don't revenge trade. I don't get emotionally invested. I know I fucked up. I am aware of it. I don't lie to myself and say, oh, I didn't fuck up, like that was the best analysis ever. No, it was a shit analysis. I know that. I just know as well that if I maintain consistency and I don't emotionally react, I'll save it. No problem. So yes, it's a fuck up, but I am the guy to deal with it. I am the guy to save it. This is what I truly believe in my head, and I urge all of you to believe that. You can fuck up, yes. You can go down, yes. Your analysis could be shit, yes. But if your analysis is shit, you are the trader to pull it off. You are the trader to save that account. You are the trader to then build it up again. No problem. Okay, so if you have this sort of confidence, then you wouldn't care if you fuck up, and I personally have it. I have some sort of an ego, so yeah. Anyway, NZD CAD, here's my reanalysis right now. Let's go ahead and do it. Upon rechecking NZD CAD, as soon as my trade was triggered in, I looked at NZD CAD and I said, okay, you know what? Let me just quickly reanalyze that just to recheck that trade. Remember, I'm trading on the 30 minutes time frame, so I have all the time in the world to recheck a trade. Like I could recheck it for 2 hours and it would still be around my entry because I'm executing on the 30 minutes, okay? Which is a huge advantage as to why I execute on a considerably high time frame according to other traders, in reference to other traders. I noticed that what NZD CAD has done is it has created bottoms right here and we just grabbed stop losses to the downside right there. And therefore, while I was just looking at that as a liquidity forming to the downside, it was actually a huge push to grab the liquidity of those bottoms right there. And therefore, as I've seen that, okay, we just grabbed stop losses to the downside, and now we're pushing up, okay? And to the upside right here, while we pushed through to the upside, look at this. We pushed through to the upside above these tops, but what did we do here? We created tops with that high, okay? And therefore, to the bottom, we created bottoms and we grabbed their stop losses. To the top, we created tops, but we pushed and created tops again right here. While yes, we tapped into the, so we're doing, let me re-explain that in a better scenario. What we're doing right here is the same exact pattern to the downside and to the upside. To the downside, we created bottoms, we pushed down, we grabbed their stop losses, and we created bottoms again. To the top, what we did is we created tops, stop losses above here, we tapped into their stop losses, but we created tops again. So to the upside, we have tops, to the bottom, we have bottoms, to the upside, we have a liquidity grab, to the bottom, we have a liquidity grab. So it's the same exact pattern to the downside and to the upside. Right here, we have a liquidity grab plus liquidity forming. And then to the upside right here, we have a liquidity grab plus liquidity forming. So I was like, why the fuck am I bearish on this if the same shit is happening to the upside and to the downside? What kind of bias is that? And therefore I went in, and immediately as it was executed, and I realized that immediately as it went just a bit down right here, I immediately closed it, which caused me right here just a $330 profit. Now, CHF JPY, let's get right into it. My best trade for the week. Let's play the video. I want to add one more thing as to why I closed this trade as well. You can see in the beginning of the video, I highlighted a 3 drives pattern to the downside on the daily, and I said that the market on NZD CAD could be going through to the upside to tackle the beginning of that 3 drives. And therefore, as soon as on these 6 hours right here, I had an analysis where the market looked the same to the upside and to the downside. So the only valid analysis now is to the upside. And therefore, because I know a lot of you guys will ask me, okay, you had the same analysis to the upside and to the downside, so why did you close your bearish trade? It could still go down. You're right, it could still go down, but because I had a bullish bias on the higher time frame, it only leaves that analysis as a valid analysis. The 6 hours analysis becomes invalid, it becomes neutral, and the daily analysis is bullish. Bullish plus neutral equal bullish, and therefore I was bullish on NZD CAD, and therefore that's why I closed my trade. That's it. All JPY pairs right now are interesting in one way or another, because we've had a lot of liquidity, a lot of volume into them. Now let's start with the daily right here. I believe we're making it into almost all-time highs right there. We just grabbed these highs, these stops right there. We are creating some drives to the upside, 1, 2, let's say. It's not a very clear 3 drives pattern, to be honest with you, but it could be 1, 2, 3 to the upside into these highs. Notice that the second drive right here created tops with those highs, and then boom. So we could see a small retracement on CHF JPY to the downside just based on that perspective. Now, as I go to the 6 hours, it becomes even clearer right here. Look at this. Look at this resistance, if you want to call it that. The market just obliterated the stop losses above it, pushed all the way up into the 175 psychological level, liquidated that psychological level, then started pushing through to the downside right here. So we could see something like, look at these bottoms right there. So we could see something like the market going down into this low right here, all the way up from here. So on the 2 hours itself, I don't know why I did that, on the 2 hours itself right here, as you can see, the 2 hours looks like we had a drive, 2 drives, 3 drives into the 175 psychological level, and then the market pushed down into the beginning of that drive and created bottoms with it, retraced after finalizing this 3 drives pattern, which is something that we usually wait for, and then right now we are in this zone. Now you have 2 choices. The first choice that I'm going to be looking at is whether I wait for those stops right here to be liquidated first and then look for something to the downside, or just simply because of the price action on higher time frames, the daily, the 6 hours, I could just simply look on the micro perspective for simply a sell, maybe a small retracement to the upside and then a sell to the downside. Let's look at the micro just a bit. Okay, first of all, let's highlight the macro right here, the 2 hours. The 2 hours could look something like that, just simply down into these bottoms right there, into this low. Okay, that's it for the 2 hours. On the 30 minutes, if I were to try to make this better, don't know what's happening at the moment. Okay, 30 minutes right here. If you could make it better, then let's look at that. I could wait for at least the grab of those highs right here when it comes to a micro execution. Like executing right now is a bad decision because I have these highs up there that all form a top, and therefore if I zoom in a bit just on the price, look at this. Market created bottoms right there, boom, into them. We just grabbed liquidity to the downside right here. Boom. So we just formed some sort of a bullish zone right here, which of course I'm not going to be selling immediately. Maybe wait for the market to make it up and take out these highs, maybe reach into these stop losses right here. And maybe then, after reaching up into these stop losses, looking at the price action, we could see something like this, for example. Like that, and then down. Notice how the 2 hours we wanted to get all the way down into this low. 30 minutes, all we need is a small push to the downside right here, possibly into these bottoms right there. And then we are done. As I told you guys, the best trade for the week, CHF JPY, $8,500 just for that trade. Now, simply put, it's a full 1 to 3 risk to reward ratio. As you can see, the risk for it was also anywhere between $2,000 to $3,000 right there. And therefore, 1 to 3 risk to reward ratio got me $8,500 for that. There's nothing really to say about this because if there's nothing to fix, then there's nothing to really say. You've already seen the analysis. The market just grabbed stop losses right here through to the upside, pushed through to the downside. All I can say, the only tip I can give you is if you guys have a specific area where you want to enter. So for example, for me, it was maybe waiting for that line to be triggered right there, but I did place my entry a little bit lower, as you can see, for that trade right here, and therefore I got in right there, as you can see, got in right here, and then pushed through to the downside into these targets right here. Just for me personally, I always place my entry right below where I'm supposed to enter, because I understand that whether it's a stop loss, whether it's any line that you're trading, a support or resistance, whatever you trade, it's an area. It is not a line. The only reason I draw it as a line is to keep my charts clean, even though, as you can see, my charts look like shit right now, but it's all because of explaining. Usually I'm drawing like that when I'm explaining trades and all this, but for me personally, my chart would look like this, just like that, line right here, line right there, and then I would understand every time, because here's the thing. Any time that you need to recheck a chart, whether that is a higher time frame analysis or a lower time frame analysis, you need to know what's going on. If your charts has all types of drawings on it and all shit like this, then as soon as you pull that chart again, let's say you pull it again in 1 hour, you go to the gym, you come back and you want to check what happened to a certain pair, you pull that certain pair, you pull CHF JPY up, you look at it and you're like, for fuck's sake, what was I thinking here? Let me delete all my analysis and redo it again. For me, I try to keep it as simple as possible, like that, for example, by drawing 2 lines. And then as I come back to the charts, I immediately understand, okay, liquidity area below here, liquidity area above here. Okay, and the reason why I draw it in lines is because drawing a box also takes too much of my screen, and therefore drawing a line is just, okay, this is the stop loss area right here. I place my sell limit usually just below where I'd like to enter, and therefore if that trade would have been a missed trade, I just get triggered earlier and then the market can go in my direction. Notice that I also didn't take any partials for that trade. You'd see in either previous videos or even videos coming after that I usually take partials. Just for me, when I trust a trade so much, I just refrain from taking partials. That's it. For me, when it comes to risk management, and this is something I wanted to talk about when I introduced the Bitcoin trade for you, but when it comes to risk management, the higher the quality, the higher the risk. As simple as that. Okay? When I say the higher the risk, I don't mean that right now, let's say I'm risking 0.5%, and then the higher the quality of the trade, I would go up and risk 2% for trade. I don't know what fucking happened to my English right here. But what I mean is, let's say I'm risking 0.5% for a good trade. Then if I find a lower quality trade, then I would risk, for example, 0.20% or 0.25% or 0.60%, no, 0.10%. Okay, so I would decrease my risk for other trades that I believe are lower quality. And this is why, as you can see, we're going to talk about it again, but this is why, as you can see, look at this. Bitcoin, this is one position, one setup. Okay, those are two cells, but it's one position right here. I only risked, as you can see, look at this risk. It only cost me $750. Right here, I'm risking 2,000 something for CHF JPY. My Bitcoin loss, $750. Okay, so the lower the quality of the trade, the lower the risk. And also not only the risk when it comes to 0.5% or 0.3%, but also when it comes to partial profits. If the quality of the trade is so low, then I would take it and immediately, let's say, partial at 1-to-1 risk to reward ratio. This is how I do it. But if the quality of the trade is a bit higher, then my partial profit area gets removed to further areas. This way, I ensure that I leverage my high quality setups. So my high quality setups make me the most money, and my lower quality setups, they lose the least money. Okay, right here, for example, I thought that Bitcoin, as I told you, because of a mistake, I thought that it's a high quality setup. It cost me $2,500. I risked the full usual amount for it. But this Bitcoin trade, I knew beforehand it's a low quality trade, and therefore I did take it. But what I did is I reduced the risk for it. And therefore it barely cost me $750 after an $8,500 win. And therefore, who gives a fuck? You just made $8,500 and then you lost $750. Who gives a fuck? Okay, so lower risk for trades that are lower quality, higher risk for trades that are higher quality. And I have a maximum risk, just for you to understand that. I would never go above, for example, let's say 1% or 0.5% per trade. Okay, so my highest quality trade, let's say, will get 1%. The lower one will get 0.7. The lower one will get 0.5. Lowest one, 0.2, let's say. Okay, so the lower the quality, the lower the risk, but there's a maximum risk that I could take on my account. And then also when it comes to partial profits, trailing my stop loss, for example, also. So it's not a fixed risk management strategy. It's a variable risk management strategy that is dependent on the trades that I'm looking at, the quality of the trades. And it also depends on my account. Let's say I'm up 10% right now. Of course, I can afford to be more aggressive, and therefore I can afford to not take partial profits if I'm up 10% on my account. If I'm down 4%, then if I'm down 4% like that, then a more conservative strategy is applied. Then I go towards things like, for example, as I told you, taking partial profits at 1-to-1, trailing my SL to BE as soon as I can, let's say at 1-to-1 or 1-to-1.5, taking less risk, for example, and all that. So the more the drawdown, the more the conservatism, and the higher the profits, the higher the aggressiveness for my trades personally. So I don't use a fixed risk management strategy. Again, I use a variable one depending on the account and the quality of the trades that I am taken. That's my risk management. Okay, now going into Bitcoin, I already said too much about risk management and all that. Going into Bitcoin, let's play the video and then get right into it. Bitcoin, same thing. I don't see something very clear on the daily. Right here you can see the market is pushing through to the downside right now. On the 6 hours, we have the same thing. The market right now pushing through to the downside. We just had a retracement. The market created all these bottoms. We went into them. I don't believe, did we tap their stop losses? No, there's no bearishness right here. So, and there's still liquidity right there. So the market is pushing right now through to the downside on Bitcoin. I still need a little bit more of price action on the macro to determine a higher time frame direction. I can see on the 30 minutes / 90 minutes, let's say, that the market is right now, as we are retracing up, the market created a lot of liquidity through to the downside, created this, And then on the 90 minutes, for example, we could see that just before the market pushed down, what we did is we liquidated this high right here. So we can see a liquidation right here. We came back into this area, and this is why inside this retracement right here, we retrace through to the upside. I can expect a small retracement on Bitcoin. This is not a macro direction. This is only micro predictions, like on small time frames. I do believe that on the 30 minutes, for example, we could see Bitcoin do something maybe like that, like just a small retracement into, let's say, this area right here, right there, and maybe, for example, see if the rest runs into these bottoms right there. Okay, something like that. Just as a micro prediction, I don't have a macro analysis for Bitcoin. I don't have a macro direction, but as a micro prediction, maybe we could see something like that, because we liquidated to the upside, pushed down, we are retracing to the upside, and inside that retracement itself, we are forming a lot of liquidity right here through to the downside, a lot of liquidity right there through to the downside. So maybe you can see small retracement to the downside or big retracement to the downside right there. We'll see how everything goes. So for Bitcoin, I'm going to make this sweet and short. For Bitcoin, simple. When I say no macro analysis, no higher time frame analysis, for me, it immediately lowers the quality of the trade tremendously. When there is no higher time frame direction and I can't know on the higher time frames where an instrument is going. So first of all, this is what I'd like to focus on. Sometimes I just don't know where a higher time frame is going. Okay, and that's okay. A lot of you, if you receive, for example, contradicting signals on a time frame, you think that there's something wrong with your strategy. You immediately start saying things like, oh, there's something wrong with my strategy. You come to my Q&As and you say something like, Roy, I'm receiving contradicting signals. How do I fix it? I don't know what to do, and all that. And contradicting signals, it is not a disadvantage. Contradicting signals are a feature. Contradicting signals simply are telling you that regarding the instrument that you are analyzing at the moment, we don't know where it's going. Your specific strategy doesn't know where this instrument is going. And therefore, you could refrain from trading it, as an example. Or as another example, for me personally, I could lower down the risk as I decide to trade that specific instrument. I analyze the higher time frame, and when I say I have no higher time frame bias, it means the bullishness is equal to the bearishness at that specific point. And since bullishness is equal to bearishness and therefore contradicting signals, it means I don't know where something is going. When I went to the lower time frames, I saw a simple liquidity pattern to the downside, bottoms being formed, a trend line is being formed right there, and I decided, you know what, maybe we can come back to tackle this liquidity through to the downside, and therefore I decided to take a sell right here. That obviously was a wrong decision, but here's how I saved it, here's how I deal with a wrong decision: risk management. I simply said, contradicting signals on the higher time frames, therefore I don't know where this is going, therefore I'm going to reduce my risk from $2,800 almost all the way down to $750. That's it, as simple as that. And therefore, by reducing my risk so much, in my risk I'm doing a statement in my MetaTrader. The statement is, I don't like that trade. Simply by reducing risk. And by increasing risk, I'm stating I like that trade. And therefore, for the trades that I like, I want them to make me the most money. And for the trades that I don't specifically like, because there's contradicting signals on higher time frames, for example, and all that, I want to lose the least money. And with that, that'll be the end of this video. If you'd like more of that, feel free to subscribe, notifications. Also, I don't know, there's a bell somewhere, so click it so you can receive notifications when I post. And I'll see you guys in the next video.